Good morning this Monday, the 25th of September. I'm Grady Wolf, market analyst with Bell Direct. It was a turbulent session on Friday and weak last week on Wall Street as investors digested signals that the Fed intends to continue raising interest rates for longer, despite holding the US cash rate at 5.25 to 5.5% at the September meeting. The Dow Jones fell 0.31% on Friday, while the S&P500 and Nasdaq lost 0.23% and 0.09% respectively, marking a fourth consecutive day of losses on Wall Street. Bond yields also surged on Friday after the central bank forecasted one more rate hike for 2023, which further depleted the attractiveness of equities compared to bonds in the eye of investors. Website building software company Squarespace rallied 5% on Friday after UBS initiated coverage of the company with a buy rating, while book and media publishing company Scholastic plummeted over 14% on missing earnings expectations on the top and bottom lines. Over in Europe, investor sentiment in the region was dampened on Friday by signals of further rate hikes out of the Fed in the US. The Stoxx 600 fell 0.3% on Friday, taking the week's losses to 1.57%, while Germany's DAX fell 0.09%, the French CAC lost 0.4%, and in the UK, the FTSE 100 rose just 0.07% to close out the week. Higher for longer interest rates is also a fear of European investors from the European Central Bank. On Thursday last week, both the Swiss National Bank and the Bank of England ended their respective rate runs, but said there is no room for complacency and will raise again if required. Locally on Friday, the ASX rose just 0.05% to close the final trading session of the week in the green after a dull few days of trading. Real estate stocks were the worst performers on Friday, while the utilities and energy sectors led the gains on the market. Costa Group rose 6.5% on Friday after the agricultural company entered into a scheme implementation agreement with a consortium led by PSP to acquire the remaining shares in Costa Group that the consortium does not already own at $3.20 per share. On the commodities front this morning, oil is trading 0.46% higher at $90.44 a barrel. Gold is up 0.04% at $1,926 an ounce, and iron ore is up 1.65% at $123.5 a ton. One Aussie dollar is buying 64 US cents, 95.55 Japanese yen, 52.52 British pence, and 1 New Zealand dollar and 8 cents. Stocks trading ex-dividend today includes Sigma Healthcare, Atlas Arteria, and Auckland International Airport. If you've been thinking about these stocks, it might be worth considering buying in today, as stocks trading ex-dividend generally trade lower on the ex-dividend date. Ahead of the local trading session here in Australia, the SPI futures are anticipating the ASX to open the new trading week down 0.34%. And now let's dive into some trading ideas for your consideration today. Bell Potter has decreased the 12-month price target on Developed Global from $3.80 to $3.70 and maintain a buy rating on the hybrid mining company following the company's release of the update on its Woodlawn operations. While the life of the mine of 7 years was in line with Bell Potter's expectations, and is expected to grow to 9 years later on, OPEX came in higher than Bell Potter expected. And Trading Central has identified a bearish signal on Goodman Group following the formation of a pattern over a period of 25 days, which is roughly the same amount of time the share price may fall from the close of $21.70 to the range of $20.40 to $20.70, according to standard principles of technical analysis. And that's all we have time for today. Have a wonderful Monday, and as always, happy investing.